Hi guys, welcome to this short video. This is just going to be quite a short video. It's just going to be specifically talking about inverse head and shoulders, how to spot them, how to trade them. I know that within the helpful images section, I've included quite a lot of screenshots of before and afters for inverse so that you can almost see what to look for first. So I know that's going to be really helpful. And I've also done some market breakdowns which actually include using inverse head and shoulders. But I wanted to touch on something that I've noticed very frequently with inverse head and shoulders, which is the pattern itself works very well in combination with either the 4-hour or the 1-hour 50 EMA. Now, depending on the pattern itself, for example, if it's a 4-hour pattern, the 4-hour 50 works perfectly, and if it's an hour pattern, which is very similar to what we're looking at here, the hour 50 works really perfectly. So it's just something to which may be of help to you guys. So what I'm going to do is I'm just going to show you how this works. So when this large move happened to the downside, which was roughly around sort of 400 pips or so, I mean, let's measure it exactly. Yeah, it's around sort of 400 pips. Now, what happened was that we came down like this, came down again, and then we stopped. Yeah, and we formed this almost this rejection to show that the price had now stopped. Now, when I was seeing this, I wouldn't have seen it instantly. I would have had to basically wait for this point to come up. But generally speaking, when I see something like this, and then I see something like this, instantly I'm thinking always inverse, 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 reversal, reversal. That's the first thing that I'm always thinking. Now, to confirm it, what I would normally expect if I did believe that this was the left shoulder and this was the head is normally price comes up to then tap the 50 EMA to form the neckline. So what I would expect on this occasion would be to cap this off, and I would expect price to come up, tap the 50 EMA, come back down to form the right shoulder, and then break through. And I found this is very repetitive. This is something that happens quite frequently. This is why I stress so much of why I use the 50 EMA on both the 1 hour, the 4-hour, and the daily, and sometimes the weekly time frame too. So I'm going to show you 3 examples today of how this works so well. So therefore, if we just watch price, so price comes up, almost taps the 50 EMA perfectly, and then the moment it does this is when we can put this neckline on. So at this point, this is when we're thinking to ourselves, could this be the neckline? We're not so sure yet. So we're thinking to ourselves, okay, this could be the left shoulder. So let's cap off the left shoulder support. And we're thinking to ourselves, this is the left shoulder. So therefore, I'm instantly anticipating the right shoulder. The moment this has happened, because it's come up, tapped it, come down, and now I'm anticipating for price to come down. Now, you and I both know that throughout this course, I always teach you to do equal movements. So therefore, for me, for this to be validated, I would expect pretty much an equal movement from here to here to validate what I think this might be. But I'm not so sure yet until we come down and reject off the right shoulder. Now, another thing that we can do is obviously we can put a fib on this, line it up with where we think price is going to go. And now, basically what I'm doing is I've now formed an area of interest that I'm looking for rejection to confirm this. Now, if this is the case, and this is what I think it is, then I would simply, for targets, be duplicating this and hoping to get sort of a target maybe up here. So therefore, my target would be around this mark here. Okay, so as you can see, just from using what I'm seeing and using this 50 EMA to reject and then form a neckline, I can already anticipate where price is going to go. And this is the secret of trading, is we have to use what's available to us to guess where price is going to go on the highest probability. So let's see how this plays out. So generally you'll come up, reject the 50 EMA, come down to form the right shoulder, and then you'll bounce. So we tapped it perfectly. And then obviously we came up to pretty much hit target. In fact, we came up exactly to hit target. So you can see how accurate this is. So, like I said, you'll get the left shoulder and head. You won't know that it is an inverse head and shoulder at that point. But then what price would do is it would normally come up and hit the 50 EMA exactly where the neckline would be. So then you can stick a neckline on it. Then you can cap off the left shoulder as support, put a fib on it, anticipate the right shoulder, wait for the rejection. Now, if this is a 1 hour pattern, you could potentially go down to the 15 minutes, look for maybe a couple of double taps on here to get your double confirmation. But to be honest with you, you probably could have gone straight off this rejection here, this 1 hour rejection. So that's one scenario of how to use the 50 EMA with inverse head and shoulders. Now, this is the next example. So as you can see with Euro NZD, we were creating bearish moves. So all the way down, we were creating lower lows and lower highs. Now again, we've got our 50 EMA here. Okay, so again, when price stops like this, and then we have this instantly again, because we've had a large move to the downside. This normally works with large moves. So this in itself is again, it's about a 400 pip move. So when I begin to see this, I'm instantly thinking price is going to come back up to here. And an extra loud confirmation would be to tap the 50 EMA. So let's just watch how price plays out. So price comes up, taps the 50 EMA here. And at that exact point, that's the first point where you can basically put your neckline in. Like this. Okay, it's a perfect tap. And on this occasion, it's the 4 hour 50 because this is more of a 4 hour pattern as opposed to an hourly. If we were to go down and look at this on an hourly, it would look a little bit messier. Now, the first thing that we do once we see this tap is we cap off the neckline and we cap off the left shoulder. Okay, so now we've got two lines. And then the next thing that we would do is we would add a fib from here to here. And on this occasion, we can see that we already have, before this bar has even happened, we can already see that we have an area of interest. This is what we're looking for. Because we don't want to trade price when it's happening. We want to trade price because we want to predict what's going to happen. So we now have an area of interest. So when price begins to approach this area of interest, because this is a 4 hour pattern, we'd simply scale down to the 1 hour and begin looking for rejection so we can get a better entry as opposed to waiting for the 4 hour candle to close. Because this is a 4 hour pattern. We've already highlighted our area of interest. Therefore, there's no need to wait for a 4 hour close on this particular occasion. We would simply just go down to the 1 hour and look for a rejection. So what happens is price comes up, hits the 50 EMA once again, forms the neckline because we've got two taps, 1 and 2, which allows us to place a trend line. And then we cap off the left shoulder. And again, it's the same situation as GA. We would be looking for similar movements and duplication. And we'd be looking for rejection. So this is something that, for example, when I'm on Instagram and I'm putting my stories out, I'm saying, look, as long as price holds here, around the 16470 level, and we don't get a 4 hour close below this kind of level, then this is a validated trade. So let's see how price plays out. And again, with this particular scenario, we don't use fib extensions for targets. We simply use duplication. So therefore, our target for this would be up here, something like that. Okay, which actually lines up also with the bigger fib from here to here, which lines up perfectly with 78.6, which is going to be potentially our new lower high. So it lines up with the larger fib too. So let's just see how this plays out. So we come down, we reject perfectly, exactly where we thought we would. We come back down again, come up, blast through the 50 EMA, and then we come up towards target. Bang, and we've hit target. Okay, so that was almost like a perfect scenario of how to use the 50 EMA in combination with an inverse head and shoulders, to how to use equal movements and a fib level to anticipate price. There's multiple layers of confidences there to find our patterns. So that's another example. And another example is Euro USD. So again, we've had this large move to the downside, and we're looking for reversals. So this particular move was 270 pips. Now again, when I start seeing this and then this, I'm always thinking to myself, inverse, inverse. I would have thought the same thing here as well. but then it carried on going. So you've got to keep kind of spot these patterns before they happen, because all we're doing really is speculating. So once I saw this, and then I saw the 50 EMA here, I would have been thinking to myself, if price has stopped, it's likely to come back up, hit the 1 hour 50, well, sorry, in this occasion it's the 4 hour 50 EMA, and then potentially form the right shoulder. So therefore, I would have had to wait for price to come up first and show me that it was rejecting the EMA. So we came up like this, tap. The moment it tapped it and formed this candle, most people would have been thinking this is now going to continue to the downside. But that's not something that I would have been thinking. But just simply because of this, what I'm seeing here, I'm seeing this almost this double top, I guess. So the first thing that I would do, again, is I would put my neckline in, which I guess would be around sort of here, something like that maybe. And then I would cap off my left shoulder. And again, I'm looking for equal movements. I'm always looking for roughly equal movements, give or take, something like this. Okay, so therefore, I already know now that the next thing that I can do is put my fib retracement from here to here, and I am anticipating for price to come down to the 618, this kind of region here, reject this area, and then again for targets, it would be duplication. So therefore, I'd be looking for price to come up to roughly around here for a target. So, you know, if that was the target, that would be a 100 pip move. Beautiful move. Great risk to reward because you can simply put your stops just below 78.6. So that would only be a nice 15, 20 pip stop. Now let's watch what happened here. This 50 EMA works so perfectly with inverse head and shoulders. It's beautiful. So we rejected. Lovely, lovely. And then at this point, we kind of rejected the 50 again. And the market almost gave us a second opportunity, another opportunity. And then we blasted through. And then we almost used really the sort of neckline for support. So this particular trade was a little bit messy in the sense that it kept kind of coming back and forth. But, you know, Euro USD can be a little bit like that at times. And then we hit target. Beautiful, beautiful. I mean, almost to perfection. Actually to perfection. So you can see now how we can use this 4 hour, the 1 hour 50 EMA to come down, help us to form the neckline, and it helps us to gauge when price is going to go next. So this was a really beautiful example as well. So as you can see, this is just a short video on inverse head and shoulders and how to use them as reversals and how to almost layer the confluences together to try and anticipate where price is going to go next. So I hope this video has been of help. I know it's a bit more of a shorter one, but I plan to do these on... I plan to actually do shorter videos on each element of the strategy and then do the bigger videos where we're using all the elements together.